Big news yesterday was Palantir's earnings after the bell. Stock absolutely crushed earnings, and again, kind of like we've seen lately, really this earnings season, companies that are beating earnings are simply not being rewarded for those beats. But again, these stocks have already had massive run-ups running into these earnings. So again, what we've seen is, as companies doing very, very well in earnings, Meta, good example, killed it on revenues and earnings. Stock's down about 11-12% since its earnings announcement. Starting to be a little bit of concerns about valuations. Palantir is a very expensive company, 85 times price to sales, 225 times price to earnings. It's a very expensive stock, but it's also growing earnings at a very rapid rate. So the bet is always this trade-off between can they grow into their valuations, or is there something else going on? Well, this comes back to the old concern about AI. Is it going to pay off? Yesterday, OpenAI cut another deal. They've been on a deal-making spree lately. They cut a $38 billion deal with AWS and Amazon. They've cut deals with NVIDIA and Oracle and everybody else on the planet involved in AI. It's a very small community of these companies, but they're all working together on developing this AI. The question, of course, is as they're starting to ramp up this CapEx, it's eating into free cash flow because a lot of this CapEx is being done out of free cash flow. So that's a good thing. They're not going into a lot of debt yet, but we're starting to see AI debt starting to increase. We're starting to see companies like Meta taking on debt for AI development. Oracle has a huge debt load sitting on its balance sheet for a lot of this build out. That's all fine. That works great as long as the payoff is there. This is going to be the one big question that is going to kind of plague this whole AI trade here over the next year or two or three, is at some point investors are going to start wanting to see a return on this investment. So it's fine that these companies are doing all this, but at some point they've got to see that payoff. And with some of these companies trading at very high valuations, that could become problematic. So again, managing risk in your portfolio is going to be very, very important. I know right now it's like, hey, buy these stocks, they're just going up leaps and bounds. Palantir's up 25-fold over the course of the last few years. So again, it's just growing massively, also in price. Even though it's growing revenues strongly, the price run is far outpacing what the revenue growth is. That potentially becomes a problem at some point. Catch me daily on The Real Investment Show. The link is in the description.